Alright, welcome back to another banger video, day 6. Alright, a little different one here. Going back to the basics, because I kind of skipped over this in the past few videos. Auction market theory. Alright, without further ado, let's just get into it. So, what exactly is auction market theory? I'll tell you right now. It is the most widely accepted theory on how any market, exchange, whatever operates. That's pretty simple, right? You already know. Video's over. Fuck it. Let's get out of here. No, that's not enough. You came here for more. I came here for more. So let's get into it. Auction market theory, it's pretty basic. It's basically just talking about buyers and sellers. And, well, what more is there really? Buyers want to buy, sellers want to sell. Buyers specifically want to buy at the lowest price possible. All right? And what this means is that buyers are all competing with other buyers to try and get the lowest price possible. Vice versa, sellers want to sell at the highest price possible. All right? Makes sense? So, how does this turn into all this down here? Well, it all has to do with two more terms called supply and demand. Probably heard those many times before. I know that I have, definitely. But supply and demand and buyers and sellers work in tandem with each other to basically drive all of what's going on down here, along with volume. But that's just another facet of what supply and demand is. So, how it works. There are two players in the market. There are your buyers and your sellers. And buyers are competing to buy at the lowest price, and sellers are competing to sell at the highest price. We've already said this, so what's important? Buyers, when buyers buy, when buyers bid, I'll say that, they drive demand up. All right? And what this means is that as demand goes up, there are more people vying for the same amount of stock in inventory. So say you have 100 buyers and 100 sellers. That is an equal relationship. Price isn't going to change because everyone can buy and sell at this price because there's the same amount of buyers and sellers. However, when demand is higher than supply, you should know these terms. If you don't know these terms, watch another fucking video about them. I'm not going to fucking explain demand and supply and demand. When demand is higher than supply, though, this means that there aren't enough stocks to go around at such a low price. And obviously, there aren't going to be any stocks lower than that because they would have been bought up already if people are buying higher. You got to understand, like, when people are buying a stock, they're always going to go for the lowest one possible because of market orders that just operate at the lowest price possible and sell. Like, not everyone's getting into the market off of a limit order, you know? And market orders always go to the lowest price possible or the highest price possible if it's a sell market order. But this means that there aren't enough stocks to go around at such a low price. Blah. So, price must go up. Go fucking to the moon, alright? And what happens then? This huge dick right here. This is what happens. There was not enough shit going on down here. Oh, fuck. Not enough shit going on down here. No one wanted to sell down here because it was like, why are we selling at such a low price? Or whatever the reason was. But there was no supply and a lot of demand because people thought that it was going to go up. They thought it was going to go down. Whatever. It doesn't really matter. We don't pay attention to what people think. We pay attention to what they do here in the markets. This is real shit, alright? Real fella shit. Real wigga shit. That's all I'm going to say. Like, 2 twos. Keep it real, you know? But price went up because demand was so much higher than supply. Now, the opposite happens over here. Look here. It went all the way down because people got up this high and realized sellers were then like, Oh, okay. This is a good price to fucking sell it. Sellers drive supply up. All right? And when supply is up, but demand is low, this means that people want to get rid of their inventory. Well, let's get this back over here. Get rid of their stocks, but they can't at a high price. So, again, if there are buyers lower than that, because there are buyers lower than that, price goes down, seeking out more buyers. Simple as, all right? You can see this in volume charts. You can see this on Bookmap. There was no one wanted to sell down here, so people had to buy. And then no one wanted to buy up here, so they had to go down lower to sell. Simple as. And then in this range right here, when supply and demand are equal, this is what you get, all right? Right here. A beautiful, beautiful little just little something, all right? Supply and demand are equal. Price doesn't trend. It ranges in between fair value. Ooh, that's a nice word, fair value. I gotta do a video on fair value sometime. But these are the basics, all right? Buyers want to buy. A lot of demand goes up. Now, how is this important? Oh, look where we came here. This is important because of what we see right here, all right? These are volume orders, all right? This is saying if it's above price on Bookmap, then it's sell orders, and if it's below price, then it's buy orders. So you can see it. It's ask 175, and then this one says bid 50, all right? And the darker it is along this kind of thing up here, the more orders are at that amount. And as you can see, what happens when price hits that? Boom! A lot of people wanted to sell up here. A lot of people wanted to sell up here. And they did a little bit. But guess what? There weren't enough people that wanted to buy up here. So what did price do? It had to come down. Had to come down until people were willing to buy it back up. And then it continued its trend upwards. But the important thing is, look, people wanted to sell up here. People wanted to sell so badly up here, but no one wanted to buy up here. So then price came back down. People are still wary about buying. People want to sell, though. People want to sell, all right. Oh, yeah. People want to sell. Anyways, back to the charts. That pretty much makes it for this video on supply and demand. Anything else that I want to chat about? Not really. I mean, that's pretty the basics of it. Yeah, fucking hell. Love it, though. This is what drives every single market. If you don't understand this, please try and understand supply and demand as terms, because that is the basics of everything that I'll be going forward with in future videos. So understand that when buyers bid, demand goes up, price goes up if supply doesn't meet it. And if supply is up and demand doesn't meet that, then price goes down. And when they're equal, price ranges. I mean, this can also happen, though, across more time frames. I'll delete everything right now. Go back to daily. Look here, we've been pushing up, 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 up. And look, no one wanted to sell down here, so price had to go up. Now we're getting up here. I don't know if anyone's going to want to buy up here, because you kind of see momentum slowing down. As you see, big candles, very small candle today, smaller one yesterday. And who knows? This is why we look at Bookmap to judge volume. Again, we're going to look up here. It still appears that there are a few people that, this is after hours, by the way, but there are a few people that want to sell. But who knows? We saw from this huge 169 sell cause a huge downward spike in buying, so there must not be that many people that want to buy at these levels. All right. Make sense? Perfect. All right. Banger! See you in the next video.